Ladies and gentlemen, welcome back to the channel. Let's give you a rundown of what we can expect this week. Now, if you guys have seen the last video, then you know that's going to be a very volatile week. You're going to have massive catalysts that come out, some of which can have implications for AMC stock. But what we seen on Friday is AMC was actually in the green. You're starting to bounce from the lows. Where will AMC stock go this week? We're going to try to do our best to give you a price prediction. And on top of that, just really where AMC is going to go over the next couple of weeks, guys. So let's get into all of this information. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Not to mention, Intera Capital just sold another, you guessed it, 2 million shares of APE. They sold another million shares on June 7th, and they sold another million shares on, let's see, June 7th. Continuing this streak of dumping APE, and this gives me a lot of confidence heading into the end of the month when you get the next court date. The more shares that they dump, and it looks like they're picking up that pace into this next court date, is a sign that things are going to be more bullish than not for AMC. Right? If you thought this was a home run, just win without any chance of losing this court battle, and this conversion was going to happen hands down, wouldn't you just hold on to the APE shares that you own if it was that much of a certainty? Every, million shares that you sell is a million less potentially you're going to make if APE were to go from $1.60 to, call it, $2.60 or $3 per share. Could be more than that. So they're dumping stock, and that is not necessarily a negative thing, right? That's a pretty positive thing for AMC itself. Now, heading into this week, things are going to be very volatile with the catalyst that we have. So, starting off Monday, like I said, you're going to get the TGA, Treasury General Account, that needs to be essentially refilled. And you're going to get 3-month bond auctions, 3-year bond auctions, a 10-year bond auction, and a 5-year bond auction. And these are going to really draw liquidity out of this market. And you're going to see that on Monday. And depending on what yields get placed on that, it can be important for the markets, kind of signaling demand in the bond market. But big day really starts on Tuesday. And it's going to be inflation data. So you're expecting inflation just as a whole to come down, really across the board. Especially the headline year-over-year number, you're expecting that to fall from 4.9% to 4.1%. That's a very large drop. And if that happens, markets are probably going to get excited. If it comes in hotter than expected, that's where you have a problem. The markets right now are pricing in the best case scenario as far as where stocks are currently trading at. And just all of the data this week is trying to paint this picture of the Fed pause and then rate cuts towards the end of this year. Basically pricing in a soft landing at this point. Well, if inflation does not fall as fast as expected, you got a problem. Okay? So after that, on Tuesday, you're going to get a 1-year bond auction as well as a 30-year bond auction. And those 30-year bond auctions tend to be pretty large as well. And you might see more money flow into those as people want to buy duration as we get closer to kind of rate cuts. Then those bonds should appreciate in value. The actual value of the bonds should go higher. And that would bring down the yield of those bonds. Now, Wednesday, before the Fed, you're going to get PPI, expecting that to come in rosy as well, expecting that to be in negative territory. It was positive 0.2% last month. You're expecting negative 0.1%. Again, expecting producer price inflation to also go down. Now, you get a summary of economic projections as well this time around with the Fed. And this summary of economic projections is basically going to forecast where interest rates are going to be over the next, 1 to 2 years. Now, it's interesting about this because the markets right now are currently pricing in a pause in June, which it all depends how inflation comes out. If inflation comes in at expectations or lower, you're going to get a pause. If it comes in higher than expectations, you're going to get a rate hike. And markets are going to instantly price that in once the inflation data comes out on Tuesday. Then you got the Fed meeting the next day. So you're basically pricing in a pause right now. This could change Tuesday, but a pause right now for Wednesday. In July, you're pricing in a rate hike. In September, you're pricing in a pause from that rate hike to stay at 5.25% to 5.5%. Then by November, you're expecting a rate cut back to 5%. And then in December, you're expecting a pause. And then in November, you're expecting a rate cut. Typically, the Fed doesn't cut rates in a rate hike cycle until something is breaking. And then when they cut rates, they don't tend to cut, pause. That would be very indicative of a soft landing, of trying to kind of reintroduce maybe some more liquidity and some softer monetary policy into this market without just slashing interest rates because you're in a recession or there's some problem. So we don't have a lot of time left towards the end of this year, and you're pricing in these rate cuts. We want to see how the Fed starts to price some of these things in. If they start to say, hey, well, maybe we could cut rates by the end of this year. That's something we have not heard before. And that would give a little bit more validity to the markets currently expecting rate cuts, right? And with the dot plot, that's what we might get. I think it's highly unlikely, though, when inflation is still 5% basically across the board. Core inflation still 5.5%. You're not going to get rate cuts. I think that does set the markets up for a little bit more pain than not. And then on Thursday, you get retail sales month over month. You're expecting that to be negative, but not enough to give you recession fears after retail sales were positive 0.4% last month. And then you get a lot of regional Fed data, initial jobless claims, as well as more bond auctions. No surprise. 8-week bond auction and a 4-week bond auction. Overall net capital flows, I think that could be a big one as well. And then on Friday, you get the Michigan Consumer Sentiment Survey. Inflation expectations, they have been rising recently, especially with the 5-year inflation expectations. Last time they rose the way that they are right now is from September to November of 2022, and that's when the markets were hitting their lowest point. So some of these things don't look good, but the markets really have not reacted to them this time around in 2023. So we definitely want to see how these data points do come out. Overall, I think there is a chance here that the markets could fall quite aggressively this week. Now, I would expect most of the fall to actually happen on Tuesday. I think the Fed will obviously be important, right? But unless we get new information, it's probably not going to move the needle too much. Markets on Tuesday off the inflation report, they're going to price in Fed policy. So that could actually give you the biggest reaction of this week. Now, you will get a couple earnings as well. Monday and after hours, you're going to get Oracle. This is some people's underdog AI kind of stock, right? A lot of people have called out Oracle as a potential winner. That could be a big runner this week. And then you get a couple earnings on Tuesday, a couple earnings on Wednesday. And then on Thursday, you're going to get Adobe. And that one's also an interesting AI play as well. So those could be some 2 runners that are going to mention AI that probably will do well based off of AI, right? So you definitely want to watch those. Nothing that's really going to move the markets in this regard, though. So there you have that. Let's talk about AMC a little bit more specifically here, because I do think if the markets come down, that's going to open up an opportunity for, collateral to get squeezed if big tech does come down. Largely speaking, over the last 6 months, 2023, most stocks have not rallied. It's really just your big tech names. Now, if we take a look at the cost to borrow average with AMC stock, it's 145%. Cost to borrow max, 311%. Cost to borrow minimum at 50%. Interactive Brokers has 64% cost to borrow fees with 0 shares that are currently available to be lent out. Option activity has been exceptionally bearish as well. Those $10, $13 puts have had a big role to play on kind of what AMC has done recently, the performance. And I think with quad witching coming up this Friday, you're also going to see a lot of volatility in AMC, especially this week. The closer we do get to Friday, as more options start to get assigned, and people have to start either buying or selling AMC at that point. So I think quad witching will be important for AMC as well, but it's not an end-all, be-all. Now, if you take a look at the actual volumes for the option activity that we are that we seen last week was 75% bullish for June 16th. You got open interest 40% calls, so not as bullish there. By June 30th, you're right at 50%. And then at July 7th, the open interest is currently at 61% calls, and it kind of dies off after that, going down to 32% by July 21st. So it looks like short-term upside. By mid-July, a lot of people are expecting some pain. It usually pays to do the opposite of what the markets are kind of expecting. So just keep that in mind, how these expirations start to actually populate here, right? Now, if we take a look at the overview of the short situation, you got a short score of 93. $528 million worth of short positions in AMC. Days to cover at 7.87. This is the most bullish thing that you could say for AMC. If you wanted to point anything out, it's that. Days to cover being almost 8. That's up 50% in 3 months. This will squeeze shorts out of short positions when the volume does come in, when there is a bullish catalyst, because it's telling you that it's getting harder and harder for shorts to get enough shares to cover on short positions as the volume has fallen. So it's really telling you there's been low volume. When volume comes into the stock, that's going to give you that big upside move. Now, as far as AMC specifically and where AMC is going to go, I don't know how inflation is going to come in. I don't know how the Fed's going to act. So it's hard to say definitively, but it's easy to see that you're either going down to $4.38 per share, or potentially as low as $4.25 per share in this lower end range if things are negative this week. Or you could shoot up to $6 per share if things are very positive this week. You've seen AMC stock was up about 2%, 2.1% on Friday. If you continue this bounce, well, eventually you're going to get some big green candles. And those big green candles could really put some of the option buyers, really some of the shorts, in a bad position. So I think your downside is still limited from here because you've fallen so much recently, and your upside could be a lot bigger than that, guys. So if you look at the RSI, that is at 43, still under neutral, still technically signaling oversold. And the MACD is pretty neutral overall, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.